We are Legally Sis. Welcome to our podcast.
The information provided in the show is for general informational purposes only and should not be construed as legal advice on any subject matter. No attorney-client relationship is created between you and Duran Schultz Law.
Hi! Welcome to Legally Sis. I'm Attorney Wen.
And I'm Attorney March. Welcome to our podcast.
How are you?
I'm good. Thank you for asking.
Saya mo
Oh yeah, of course. I always see you every day. So why are you asking how I am?
Baka mangungutang siguro ako sa'yo.
Oh my God! Ako nga nangungutang sa'yo eh.
Okay, I think that's a good topic for us to discuss, yung pangungutang.
Yes.
Okay. Loan. What is a contract of loan?
Okay, a contract of loan is a situation wherein one party, meaning a creditor, would be lending money or something to another person, and that other person is also borrowing that money or a thing from the creditor.
So what is the usual subject of a contract of loan?
Money.
Hindi ba consideration yun?
Yeah, consideration. Yes, money, consideration. There are different types of loan. Like,
That's right.
you have a loan of a property. You have a loan of a thing. But for this episode, we will just be discussing a contract of loan,
With regards to money.
financial.
So in a contract of loan, who are the usual parties?
The usual parties would be the creditor or yung nagpapautang and the debtor or the borrower.
Okay. So what are the usual terms and conditions of a contract of loan?
Yes, you need to have term and termination,
Okay.
when the loan will start and when it should end. You need to have a provision if you would want to have an interest. Would it be a simple interest or compounded interest? You need to have a provision relating to penalties if that person does not pay on time. You also have to have a provision on breach. If in case something happens, that loan is not repaid within the period of time that's stated in your term and termination. You also have to have a manner of payment. How are you expected to be paid? Do you get paid every month, every year, or just a balloon payment? It's up to you in the contract. You also have to have a provision on collateral if that is something that you have discussed with the borrower or the creditor.
Okay. So you've discussed about having a collateral.
Yes.
What are the best practices for giving a loan if you're a creditor and on the other hand you're the debtor?
Yes, in any contract, particularly a contract of loan, it is necessary that you have due diligence. If you are not the bank, you don't have the muscle of the bank when it comes to credit check. But there are ways for you to check if your debtee or your borrower will be able to pay for the amount of money that he is trying to borrow from you. How do you do that? Well, you check the lifestyle of that person, you check what the work of that person or business, how is that person in his neighborhood, is it a person of really good repute that you can trust that person to pay you when it's time for payment.
So you mentioned a while ago the terms and conditions that are usually put into the contract of loan. So I know that there are sometimes an acceleration clauses. So can you explain that?
Yes, that's a very good question because in other loan agreements, there is none. So an acceleration clause is a clause that says if you are remiss in payment of any of your installment, the creditor can ask that the entire amount of principal or entire amount of the loan will have to be due and demandable immediately. You don't have to wait for the next installment for it or follow the schedule of installment because the trust already is broken, so you can already ask for the entirety of the loan to be paid. We can talk about that person that asked for our assistance. He showed
Okay, what's that?
us. He showed us a copy of his loan agreement.
Oh, okay. Yeah, I remember that.
We've discussed about the mistakes he made with the contract of loan that he has provided. I can see at least three mistakes that he made. One is it's only signed unilaterally. Only one person signed. I mean, why do you have to have
A
contract of
loan
loan?
being signed by one person. Yes.
How are you going to enforce that? That's difficult. Okay. The next one would be the collateral.
Which is TBA. Okay, what's that? Okay, you talk about that.
TBA, to be announced. If you are the creditor, how are you going to protect yourself and get another property if that person is unable to pay if the property indicated as a collateral is TBA?
So you, as a creditor, you have to make sure that the collateral is very specific.
Correct.
Yeah.
And exist.
Okay. Yes.
Right? You put a title number there. You didn't look at the certified true copy of the title. Then how are you going to attach a lien on that if you don't know that, yeah, if it's pure use, right? Or you look at the title and the title is not under the borrower's name. So that can be difficult.
Yeah. How can you protect yourself if you're the creditor?
Correct. And the third issue of his contract, unfortunately, he didn't put a time or a term date when the loan will have to be paid.
Yeah, as you mentioned a while ago, that's very important or very basic in the contract of loan.
Correct. How are you going to ask for the payment? You don't know yourself when it will be paid. You didn't put it in the contract.
So you mentioned about the collateral a while ago being the real property. Are there any other options for the debtor to put into a collateral if, say,
Yes.
he doesn't have any real estate anyway?
Correct, correct. There are a lot of types of loans, right? You can have your car as a collateral. That's common in chattel mortgage or auto loan. You can have your shares of stock as part of the collateral. This happens in pledge. You can have your jewelry as your collateral for loan. This happens in pawn shops. You can have any personal property like laptop, computer, anything that the creditor may think is of value. So you leave that with the creditor for the time being until your loan has been fully
paid.
repaid.
Okay. So can a third party actually borrow a loan?
Ah, yes. For and half on behalf of another
Yes.
person, you can't really do that unless there is an exception. But why can't you do that? Because in the civil code, why? How can you take a loan out of another person, especially if that person did not give you the consent? It's really a huge amount of money, right? But you can take a loan for and behalf of another person if, for example, you have an SPA, special power of attorney, like you are the husband and you have to be alone as spouses. You get the SPA from your spouse so that you can have a loan. Another one is if you are the president of a corporation, you need a board resolution so that the loan will be under the name of the corporation instead of you as a person. On the other side of the coin, can another person be paying for the loan that you have taken? Right? This is where the concept of surety and guarantee will come into play.
Okay.
So remember, we discussed who are the primary parties in a loan. That would be the debtor and the creditor. But you can have a third party for that. This would be a guarantor or surety.
Who is a guarantor in a surety?
Yeah. Okay, I'm fishing for that question. Yeah. Distinction has to be made between a guarantor and a surety. A guarantor is a person that binds himself to pay for the loan if the debtor is unable to pay. Whereas a surety binds himself to pay for the loan if the debtor does not pay. This means for the creditor, yung nagpapautang, would have to exhaust remedies and check if there are other properties of the debtor that can be used to satisfy in the payment of the loan. Versus if it's a surety, regardless of what happened, the debtor does not have to find for other properties of the debtor. He can immediately go after the surety to pay for the loan. What's the lesson in this
Okay.
episode? Well, never sign as much as possible a guarantee or a surety. Because you're not the one that took the money. You didn't benefit from it.
That's right.
Sometimes, though, it happens. For example, you're a parent, right? And your child just got married and needs a loan from Pag-ibig, right? Um, the parent can co-sign the loan so that the parent can be an added collateral. The parent's property can be an added collateral for the repayment in case the son or the daughter is unable to pay.
I guess the thing is, if you're the borrower, you know your obligation already, so you have to commit. Well, you already committed yourself actually by asking for a loan to the other party, and you have the obligation to repay that. So
Yeah, it has to be, live within your means.
yes,
Don't borrow if you think you can't pay for it,
yeah,
right?
that's
It's not free money. You have to return the money at certain point.
so huwag kayong mangungutang ng hindi nyo kayang bayaran, ha? At ipasa yung obligasyon sa kabila.
Yeah, it like credit cards.
Oo.
That can be another topic because it's a long topic also.
Thank you, Attorney Mars.
Thank
for a
you.
good conversation like that.
Bye.